Welcome back, investors, to Ticker Time News. I'm Adam, and Morgan Stanley, ticker symbol MS. In the aftermath of disappointing earnings reports from Goldman Sachs, ticker symbol GS, and JP Morgan Chase, ticker symbol JPM, and also Citigroup, ticker symbol C, expectations had been reset lower ahead of Morgan Stanley's Q4 21 results. It was clear that steep decline in trading activity, especially on the fixed income side, would heavily weigh on this quarter. As widely anticipated, that scenario unfolded and created a potential headwind. But Morgan Stanley still managed to edge past the EPS estimate while its revenue came up just shy of analyst expectations. Relative to most of Morgan Stanley's banking peers, its Q4 results look a little more balanced. With stocks selling off one day and gaining the next, wouldn't it be great to know what the top 10 stocks are in categories like value, growth, dividend, and momentum? Well, great news. We just uploaded our top 10 stocks list for each of those four categories. That's over 40 high quality stocks ready to choose from that are constantly updated. So you always have the best names available. Click the first link in the description and become a member to get instant access to our top 10 value, growth, dividend, and momentum stocks, and so much more. We've done the research so you don't have to. Areas of weakness are evident, including the 31% plunge in fixed income trading revenue. And Morgan Stanley's mixed headline numbers represent a major step back from recent performances. However, there are also several key positives from the report that highlight Morgan Stanley's outperformance during the quarter. With the more volatile trading business cooling off in Q4, Morgan Stanley's strategy to become a leader in three distinct financial markets: institutional securities, investment management, and wealth management, that worked in their favor. At the core of this strategy is the company's recent acquisition of E-Trade, completed in October of 2020, and Eaton Vance, completed in March of 21, which diversified its customer base and added a consistent fee-generating business. In the wealth management segment, which houses E-Trade, net revenue grew by a healthy 10% year over year to $6.25 billion. This is the first time that Morgan Stanley's lapped a quarter in which E-Trade was included in its results. Outcomes in the investment management segment are still impacted by the Eaton Vance acquisition, explaining how net revenue surged by 59% year over year to $1.75 billion. Higher performance fees also contributed to the strong growth. The jump in compensation expense has been another main storyline for the banking industry this earnings season. For instance, Goldman Sachs and JP Morgan Chase's compensation expenses climbed 31% and 14%. Morgan Stanley kept a much tighter lid on these costs, though, as its compensation expense was just 1% year over year higher. This allowed Morgan Stanley to generate year over year EPS growth of 11%, while Goldman Sachs' EPS fell by 11%. Equity trading was a relative bright spot. Net revenue increased by 13% to $2.86 billion. Although the growth wasn't enough to offset weakness in fixed income trading, which drove total revenue trading lower by 26%. Morgan Stanley outperformed Goldman Sachs in this space. Like Goldman Sachs and JP Morgan Chase, Morgan Stanley also capitalized on the robust M&A market. M&A standing for mergers and acquisitions. Its advisory revenue rose by 30% to $1.07 billion. The strength in advisory eclipsed the slowdown in equity underwriting, a loss of 15% year over year, as secondary offerings and IPO activity declined. Overall, Morgan Stanley's investment banking revenue increased by 6% from a year ago. Heading into Morgan Stanley's report, most of the bad news was already priced into the stock. That's why we see gap down after gap down. With expectations suppressed, the company's modest earnings beat is viewed as better than feared. Morgan Stanley, in addition to leaping over that lower bar, also stood out through its more balanced performance, driven by a diversified business model. Well, that's what I think about Morgan Stanley's earnings right now. But I want to hear from you. What do you think about the plunge in fixed income trading, not just at Morgan Stanley, but at other big banks as well? And what about Morgan Stanley's diversified business model? That seemed to have saved the day. And remember, your comments make these videos so much better. Thank you so very much for watching, and I'll see you in the next video.